Hey everybody, welcome back to the channel, and what an exciting day it was today. Tech rallied 3.5%, just an absolute huge move in high beta growth cyclical tech related stocks. Really spilled over from the Fed yesterday, and we had mega cap earnings out today. Mega cap tech with Google, Apple, and Amazon all both gapping up on huge volume, although they are now selling off hard enough now. Look at Amazon's down 4.4%. But it was a mixed day as well. Even though we had tech up heaps, the Dow was off. Tech did well, small caps did well, international was off a bit. And look at volatility. VIX up 4.8% when the market's up, good. Normally it's an inverse relationship. When the market's up, good, volatility is down. But what this tells us is that smart money is actually buying hedges. They are playing for a pullback in this rally. They are increasing the price of upcoming volatility, and we can see that in 9-day volatility jumping up to 19 now. So, and the breadth wasn't quite there as well. If you look at this is the percentage of S&P 500 stocks above their 20-day average. That actually decreased today, 4.6%. And we have put-call ratio at a very low 0.79. That means there's a lot of people buying calls. They probably retail loading up on calls and meme stocks, which I'll get to in a bit. And that's a great contrarian signal. And with the breadth kind of plateauing and VIX popping up, that's indications that we might be a bit stretched here in tech stocks and ready for a bit of a cooler. But there's still strong structural technical moves in the market that suggest this could be a big year for the stock market. Like we have had a roaring January with a lot of areas like micro caps and small caps and tech, and a lot of the stuff that was beaten down last year really jumping up and basing. So things look good this year. Like we could have a big year. I wouldn't be surprised if we finish the year up 20%, but that doesn't mean we can't have a little short-term pullback here, and maybe possibly even a 50% retracement. If you look here at the cyclical sectors versus defensive sectors, they're up 2.8%. High beta stocks versus low volatility up 3.3%. And look at this, gapped up, and we're now totally above the buy-sell band. Normally that's an indicator the market is really stretched, and we can see we're 16% above the 50-day, which is a record as well in the last year. So we are very stretched here with this whole cyclical growth trade. This is our growth ETF versus the value ETF, and if you've been watching the channel, we've been talking about this developing over the last couple of weeks, and now I'm thinking it's a little stretched, at least in the short term. I mean, this could be a prevailing trend this year. If you look at last year, the two of the big trends was short high valued tech, software, cloud, and long undervalued energy. This year we could see a little bit of a reversal there, or at least we have to start with. So this trend couldn't continue, but so far it's looking stretched. And I think what tech stocks really love today as well, on top of the earnings reports kind of been in the rearview mirror, even though a couple of them missed, is we look at the 10-year has broken down through this support zone we've had here. We've been watching 350, and that's gone down to 340 today. So that's good for long duration assets like tech stocks. And with that, we had treasuries up a little bit, and look at high yield. High yield's broken out above its resistance line as well and appears to be holding. And this looks like an inverted head and shoulders. So that is good for risk sentiment across markets with that price action in high yield. Dollars made a little bit of a reversal today. Appears to be holding there a little bit in the support zone. Bitcoin was off a little bit. Commodities were down a bit, and look at Dr. Copper. He's come off pretty hard there, and he can normally be a pretty good leading indicator of what's to come. So this guy could be preempting other moves in risk markets. Gold was off too, and what we can see is some sort of like, you call it a bearish kicking or dark cloud cover formation here. We've got, you can see on our seasonality indicator, over the next 7 days, typically in this time period in history, gold will come off 1%. And we can see we've reached, we had an extremes, above the mean up here, getting near the extremes. So gold looks, and it was on above average volume as well. So gold has been in a parabolic uptrend, but this looks like to be the first strong bearish signal so far out of this trend. So that could signal a further pullback to come. Same with silver. We've got a big bearish engulfing candle pattern here on above average volume, and some weak seasonality coming in this week. And it looks like we've consolidated, and this could be the start of a bit of a pullback here. Oil was down. Natty gas down again on big volume. I'm getting more confident by the day that we are nearing a bottom on this thing, and at least going to have a good bounce up to maybe the 50-day VWAP here, or a 38% retracement, at least from this swing high back in mid-December. So my target would be around 1340. We'll just get rid of that Fibonacci. And let's just look at this a bit closer here. Okay, so we are super oversold. We're 45% below the 50 bar here. And if we were going to play a long trade here, as we said, that 1342 levels, the 38% retracement from this swing down, where we haven't had a real bounce or retracement left. So if we were to take a long position here, I would look to have the stop. We're currently at 838. I would look to give it a little bit more wiggle room. Let's just say a bit over 10%, 11.8%. So below 750 at 741. So we're at 838. We're giving it, about another point to move if you want a real tight risk to reward. And if we were going to go for the target up here at 1345, 1342, that would be a risk reward of 5 to 1. So every dollar you risk, you've been banking 5. Now, of course, this trade might only have 30-40% chance of winning, maybe even less than that. But even then, that would still be a good trade to take 100 times over. You could even increase your risk. Let's say we could take it down to around 632, give it 2 points. Give it 2.09 points of wiggle room to, bottom out, get the formation, base out, consolidate. Even then, we'd still be looking at a 2.4 risk to reward on this trade. So for a mean reversion bounce, I think it's starting to get to a good level here where it could pay off with a good risk reward trade. Anyhow, we'll keep that there, and we'll come back to that over the next couple of days. So stay tuned in and subscribe to the channel, and we'll see how this trade plays out. Agricultural was flat. Uranium came off a little bit today, on quite a lot of volume actually. So we'll be keeping an eye on this one. Apart from that's been walking the line and what looks like a strong uptrend. ARC 2021 all over again. How many people do you think loaded into this today and bought calls? It is strong price action. Look at that volume. Gap up, held on volume. However, we're 26% above the 50 bar. That's an extreme for the last year. So I wouldn't be buying up here. Sure, we could keep spillover until tomorrow and the next week. However, this looks very overbought and overcooked to me. So I'm out of tech completely. I don't want to hold long here, and I don't want to short it just yet either. Industrials broke out above their resistance line today that we've been watching. Transport, look at transports, up 3%. That's huge. Energy was one of the biggest sectors off today, on above average volume as well. So that kind of What didn't give the breadth today? It was a really kind of strange day. We had tech and high beta just slingshot higher, and then we've had a bunch of other stuff and commodities kind of come off a bit hard as well. Materials held up, clean energy bumped up, gold miners were off on more bearish candlestick pattern. Home builders are stretched here. We actually exited our home builder stock we had in our equity long short portfolio yesterday, and out of all the sectors and the fundamentals, I know like tech's reported a little bit weaker than expected earnings and so on and so forth. The biggest disconnect between technicals and fundamentals is in home builders. Home builders are having like record cancellation rates, industries in decline, real estate's in decline. Still a lot of storms on the horizon there. And look at price of the home builders up here. We're 14% above the 50 bar on a spider. So that is very extended to the upside, and we are not long up here. Although the action in real estate sector is actually looking good and holding strong above it. So I won't deny that. So I'm not shorting any of this yet. I'm just not long, and definitely not staying long in the home builder sector. Financials holding a little bit above this resistance we've been watching. It's kind of just thinking what to do here. We could still have a turn here, but this has been a big area where we've had previous to multiple turns at this point. So it'll be interesting to see whether we hold through this or charge through that. Communications, look at that with Meta today. Absolutely ripping. Higher on volume. That is a huge move. 6.5%. Tech up strong. Discretionary up strong. Retail is kind of looking like a bit of an evening doji, spinning star up there on volume. It's kind of tagged. We've had this line up here drawn in for weeks now, and it almost bounced off it to the penny. So that could be a double top on retail. This definitely looks like a bottom formation, but I would not be surprised to see us come back down and test this 68 area before it could come back and bounce off this into a new uptrend. But I wouldn't suspect it on this, triple bottom to come back down and test that. Semis is strong and moving up into its resistance zone we've had here for a while. There's been a lot of chop and turns there. Looks like to powered through, with resolve on volume as well. That's NVIDIA and AMD right there for you. Bots holding strong up here. Biotech looks good. So flick on the trend candles. I remember back on this day here on the channel, we'd been watching this tight range forever, seeing how unbelievably tight it was, and then it just broke out and it's gone into a strong short-term uptrend there. So that's looking good. Biotech's looking good. And then the defensive sectors are still looking heavy, trading under their 50 bars, with healthcare, staples, and utility. So is this the end to the cyclical growth, high beta rotation that we've seen since the start of the year? This could be a week, even if we have a breather for a few days or a week before resuming that theme. Today seemed to have reached felt like some sort of capitulation of tech shorts. Also, it felt like someone unwound a whole bunch of high beta tech shorts, or retail just dived head into calls as well, which I suspect as well, looking at the put call ratio at 0.79. So I think that's why we got kind of that real unwinding kind of feel today. BlackRock trickling up there, and then the mega cap tech, even though all earnings missed, both top and bottom line. Google missed as well, top and bottom line by 10%. But look at that. So that was huge price action, especially considering the misses, The old bad news is good news effect, although we are coming off hard and after hours here. and Meta. Look at that. If you've been watching the channel, we've been we are long in our equity long short portfolio. Back at 120 we got in, and then ever since it broke through this downtrend long, we've been saying it's a good long, the valuation. And then we had that huge pop up today, got up almost 27% I think on after their earnings, and that's what's really sparked the market today, risk on today in the tech sector. Semis had another strong day. AMD up, Nvidia up. We've been long this one as well. Netflix strong. Barber came off. Tesla hit our price target. If you've been watching the channel, you can go back and look at our old videos if you don't believe me. I've been talking about Tesla bottom from down here. We had our target up in this 195 zone, which it hit today. So that was 101 to 195, almost 100% gain in a little over a month. That's what a good swing trade looks like right there. Meme stocks had another great day. Look at this, Carvana up 5%. It was up crazy. It was up, I think it was up like 13 to 19. Yeah, it was up over like 30% this morning. Bed Bath Beyond up 18%. Even AMC up 6.4% in GameStop. GameStop just can't get this thing's structurally dead in my opinion. This is all just little dead cat bounces that can't even break through previous lower highs. So there's not an uptrend. This is just trying to find a bottom bit. I think it's just going to fall flat on its face in the mud again. That's just my opinion, my speculation though. I could be wrong. Okay, so looking at all that, what an interesting day. How did I finish? I came in today, if you watched the channel yesterday, I was 60% net long, did really well. You go back and look at my channel yesterday, I added DocuSign and Etsy and a semiconductor, which all ripped today. However, this might be a surprise. I took them all off the table and have finished the day 60% net short because I just could not find a long setup that I felt comfortable with today. And I was seeing short setups all over the place. This market is, in my opinion, great for a short mean reversion play, and that's what I did today. So I'm positioned net short. I think there's a lot of indicators there for at least a short-term pullback, which we're already experiencing after hours. However, structurally for the year, this could still be a big bullish year. So I'm always staying nimble and ready to change at a moment's notice. Alright guys, thanks for tuning in. Hit that subscribe button so these videos show up in your feed every day, and we'll see you again tomorrow to discuss tomorrow's price action. Take care out there.